Hello, everyone, and welcome back to the podcast. We had an exciting guest today, my good friend Jamal Hassan. He was able to join us and have a great conversation around Treasury Management Solutions and how those services can help empower and fuel your business's growth. All that and more, so let's dive in.
Transact Capital presents Banking on Your Business with Jacob Robertson.
Thank you for joining us today. We're excited to have you. And I got to be honest, you and I were former teammates together. So I really enjoyed the time that we got to spend working together, and excited to have you here on the show. So.
Well, thanks, Jacob. I appreciate you having me.
Yes, yeah. So, we have a lot of exciting things to talk about today, but before we dive into that, we want to give you a chance, just like we give everybody a chance. Tell your story real quick, give a quick introduction, and then we'll dive into it.
Yeah, well, I appreciate that. So thanks very much. My name is Jamal Hassan. I'm with Wells Fargo Bank currently, business development officer here in Richmond, Virginia. I've actually been in banking for 17, going on 18 years, and I'm kind of what I consider myself to be kind of the last of the old school bankers.
Right? Oh, yes,
You kind of start at the bottom as a teller, and you got to have all your money facing in the same direction and all of that. So I'm a Richmond native, grew up here my whole life. And so I have a lot of connections here in Richmond, especially in with realtors and business development groups and that sort of thing. And so one of the things that I really enjoy doing is, and I've worked very hard to get to this space where I can focus exclusively on businesses and what their banking needs are. And so I feel very fortunate to be able to be at that place and being able to provide those types of services.
Great. Okay. So tell us a little bit. What is your ideal customer profile? Is there a certain size, a certain industry? What are you really going after?
So my ideal customer is one whose gross annual revenues are somewhere between $1 million, $15 million, and who have complex banking needs, such as treasury needs, loan needs that are over $100,000, complex credit needs, that sort of thing.
Okay. So, as we think about that profile, and this is the question I always get, and I think that the topic of the town is, what are you seeing in the local economy or the national economy that's really impacting those customers? And then it's, what are we doing to overcome those challenges? So, just curious to hear from your point of view, what are you seeing in the economy that's impacting that client base?
Well, I think the one thing that everybody's seeing is, the sticker shock of increasing interest rates, as well as access to capital, with the whispers and everything of recessions and things like that. People start to kind of get into that mentality of it's time to collect all my acorns and kind of bring them back, and so people are a little bit more hesitant to maybe make the investments that they would typically make during kind of a boom cycle. Where they feel like everything's kind of flowing and that sort of thing. So
okay. Yeah. So as we think about that, what impacts are you seeing directly on your clients? Or, and do you think is it trending well and we're going to weather the storm, but things are tightening up and what is your general opinion?
Well, I think my general opinion, kind of personal opinion, based on a couple of years of being in the business, is that I think we're going to be fine, right? I think it will be okay, right? I think that's always kind of in the forefront of my mind. But I think it's just I think people, and I think a lot of people believe the same thing too, because although the cost of funds has increased and there's a lot of regulation, added complexity, that kind of slows people down. I am seeing people, they are still out there buying businesses, trying to hire folks. It's still kind of business as usual. And that's a good thing about business owners, man. They're very resilient. They're like, look, I gotta find a way to make this thing happen.
Right.
And I like to be there to help them with that.
Yes. Yeah. So yeah. I'm curious to hear. What is, when you say you want to help them, what is your approach? What is your method? Let's assume it's a brand new company that walks into the front door. How do you kind of handle that relationship?
Yeah, so I make no assumptions when I talk to a business owner, right? I'm always the one to kind of listen first and speak last. I always want to take a collaborative type of approach and let the customer tell me what what they're facing, what they're dealing with, what challenges they have, and then I kind of go back and match those challenges up to solutions that the bank can provide. And it's really gratifying to be able to, for example, help a first-time doctor, buy their first location and get the practice off the ground, or help somebody, open that restaurant that they've been wanting to open and been holding off on. So, it can be life-changing. These people are stepping out here, taking the risk of opening a business, and then you're able to kind of help them, take that first step and put them on get them in the game, essentially. Right, get them on that level playing field, and at least give them a shot at winning the championship. So.
Okay, yeah. So yeah. I mean, I would love to hear a little bit more, and then kind of really get into the details of, what are some of the solutions that you all provide, and I'd say from a treasury standpoint would be really interesting, and so as we can just kind of walk through a scenario. So we'll say. Let's say we have a contractor or like a residential fencing company, walks in and how would you first kind of assess their cash flows, how money is coming in and coming out, and then we'll kind of talk through some scenarios and some strategies. But yeah, kind of curious, from a treasury standpoint, how do you really, assess a company?
Yeah, so what we do is we take a look at the operating cycle and their cash cycle to find out how money is moving through that business. Right. So one of the things that, you take a look at, let's say, for instance, a fencing contractor, you're saying, hey, look, man, I've got, as an example, you said, I'm getting a lot of checks. Right. Or I'll send out an invoice and it takes, 90 days for that money to come back to me sometimes. What can I do to get paid faster? Because in the meantime, I've got I got guys that, want to get paid. I got my monthly bills that are due. I've got these obligations to meet on a monthly basis, but then I've got, receivables that come in, quarterly or every other month. And, you can kind of, say, look, man, my account's getting a little, there's got to be a better way to do this. And that's where we come in with the Treasury Services and looking at, the solutions that we can provide to help speed up the cash collection cycle. And understand where that plugs into the business's operating cycle to help them, kind of be more efficient.
Okay, so I am curious to just a part of that is how often and how would you assess these business owners are very busy, like you said. Mm-hmm. They have a lot going on. What would you rate just from your point of view on their handle on some of these financial metrics that should really drive that conversation? Just initially, what are your thoughts?
Yeah, so I think part of that discovery call has to be kind of as you have that conversation with a customer, you're going to do a number of things, right? You're going to be able to assess their general aptitude for business, in particular the financial side of the business. Are you the kind of business customer that has a legal pad and kind of does his budget every month on that? Or, hey, look, I've got my accounting software. I've got, I know what my monthly reports look like. I can speak to, my weekly revenues, my monthly revenues, profit and loss, my balance sheet at any particular period. And you're going to, in our conversation, we'll kind of tease those things out, kind of that aptitude for banking, what that client's experience has been like. With business banking? Have you taken advantage of, just basic checking and savings, or, are you at a place where you're using a more expanded suite of services, such as Treasury Management Services like remote deposit capture, debit and credit card acceptance, merchant services, that sort of thing, to be able to speed up the cash collection and streamline your receivables.
Great. Okay. So you want to work with the kind of the A+ companies that have their books in order and are ready to go. And if they're not, you're going to get them. You're going to get them there.
Correct.
Right?
Correct.
Yes.
Yeah, that's correct. And so the companies that kind of fit the segment, but they kind of don't have it all together. You could kind of get a little bit. You have a little bit more personal impact there. Right. I feel like because people are, you're providing something that they've not. Maybe necessarily gotten a good handle on, and it's not just them personally, but a savvy business owner may not, be all into the reporting. I'm a numbers guy. I work for a bank, so I'm a numbers guy. I like to crunch the numbers. But if somebody's, an auto mechanic, does he care as much? I don't know, maybe not. But if he has the, the foresight, or he or she has the foresight to say, hey, look, here's my assistant Tom. Tom loves to crunch numbers. Tom, meet Jamal. Jamal, Tom.
Yes,
So,
yeah.
you can that a person like that is I kind of look at that very similar to somebody who likes to crunch numbers themselves from a business standpoint, if that makes sense, because they recognize that there's something that a gap that needs to be covered there.
Right, right, yeah. So yeah, let's talk about some examples. So we talked about the fencing contractor, and so they are struggling to collect payments. What are some ideas just off the top of your head, some strategies that they can deploy to shrink that accounts receivable days on hand, which will in a sense free up some cash?
So that's a great question. So there's a couple things you can do, and a couple things that I can help with, but there's a couple things that they can do also, just on their own to kind of speed up collection. So the things that I can help with are I can implement debit and credit card acceptance at the point of sale. So if you have guys out in the field, and you've got a project foreman or something like that, they finish the job, they hand the customer the invoice, and they say, hey, listen, if you were planning on putting this on a card, I can take that payment for you right here in the field. So that's one way that you can kind of get instant payment, right? So that way you don't have to wait for a check or anything like that. Another idea would be to do something like remote deposit capture. So instead of waiting for you hand a customer an invoice, you say, would you like to pay now? They write a check. Your employees can bring that check back to the office, and you can process it in your office the same day for next day credit. And these are just a couple of ways that we can kind of speed up collection, cash collection for these projects that are finished, and you can get payment right at the time of service.
Okay, and so that's great insights. And so you think on the other side, the accounts payable side, let's say that same company is struggling to extend their payables and really kind of work through their cash flow. So what are some strategies? And you got to think, so they're going to have one-time kind of lump sum purchases of all the material. Mm-hmm. I assume that'll be seasonal, to buy it at like the bottom price, and then they can, in a sense, go and resell it. And then how do you manage the, like you said, the monthly, kind of daily, weekly expenses that are typical in a business? So how would you, approach, the resolving and optimizing the accounts payable process?
Yeah, so that's the other side of the coin, right? Where you want to get paid as fast as you can, but you want to hold off on paying until you really have to. Mm-hmm. And so one of the ways we can do that is by employing a number of different credit facilities, right? So to the first point that you made, materials and buying in bulk, line of credit is great for that. If you have inventory that you need to purchase, before the busy season starts, and you want to have that inventory on hand before you have your high volume of cash coming in, that's a great option for you to use. For your monthly kind of bills and things that your materials and kind of your month to month sort of things, you can kind of delay that by putting that on any type of card facility, and kind of stretching that payment out a little bit so that you don't have to worry about that. Typically those are going to be every 45 days or so, and you can pay that out, and kind of get that extra week or 2 weeks out of it to pay.
Okay. And so, are you seeing, and I know back like we talked about 2-3 years ago, interest rates were basically, at zero. And so it was very, I'd say, I don't want to say easy, but it was just a different time for companies to get large lines of credit, large credit facilities, because you think, the bank is, hardly paying anything to the deposit base. And so they can, extend themselves and give a lot of money towards a line of credit. Are you seeing now where companies, could be faced with a situation where that line of credit isn't where they want it to be, and so maybe there's a method to, still go through an alternative credit facility, like you said, a credit card or a card program? Are you seeing that kind of more often?
Yeah, I think you do have to be a little bit more savvy. You said that is an excellent point. I mean, when a bank looks at its balance sheet, of course, you're looking at making sure you avoid the number one thing, which is disintermediation, right? You never want to go there. And so when we have these sort of economic whispers and things like that going on, you do have some credit tightening that happens. And so people are seeing, hey, look, that, $250,000 line of credit that I had sitting out there, suddenly that's being revised a little bit, and, I may only have 150 available to me. And so then, like you said, they complement that with, additional credit, such as, credit cards. if they still need to be able to access, a certain amount of money in order to operate.
Okay. That's great. And then as you think, and this is another topic that comes up often, unfortunately, is fraud and the prevalence of fraud. As it's AI is unfortunately driving a lot of really advanced approaches. So there's some high tech approaches to fraud, and unfortunately there's still some low tech or low tech where someone's just going around to mailboxes and opening them up and pulling the checks out. So what are you seeing on a fraud landscape, and then what are some of the strategies that you can employ to mitigate against that?
Yeah, so I think this is another area where our treasury services kind of shine through, right? And I think in the era of AI and all these different things that people figured out how to do, fraud is at the top of everybody's list, right? And so one of the things, or two of the things that we can do to kind of offset that or to protect your accounts against that sort of thing are going to be check fraud filter and ACH fraud filter. So there's two ways items that could come through your account. One is a check, or two is some sort of electronic debit. And as a business owner, you have, you take a great risk, because sometimes you find yourself, like an individual, you really can kind of get away without writing checks at all, right? Nowadays, you got Zelle, you got all these different things. But sometimes business owners, you have people come in and bring you materials, they want to get paid, or you have vendors that need, cash on delivery, or they need a check right then. You're still writing these checks. Mm-hmm. And, unfortunately, like you said, there's some low tech options that people can use to say, hey, look, I'm going to just take a picture of this check before I hand it off to, my employer. Right. And so you've got that exposure out there. And so one thing that we can do is we can employ a check fraud filter, whereby a business owner will submit to us a list, daily, if they're writing checks daily, of the checks that they've written. And so if we see, anything other than those checks, anything that's modified from those checks, those payments are going to be stopped. Those transactions will be blocked and set aside for review. And then the business owner will be able to, first thing in the morning, go back. We'll send them a list and say, hey, here's your exceptions. Are these right? Are these okay? Did you write these checks? And they'll be like, nope, didn't write that one, didn't write that one, didn't write that one, didn't write that one. And we cancel all of those.
Okay.
And so ACH fraud filter does basically the same thing, except for electronic transactions.
Yes, yeah. Yeah, I was always told that the most frequent day for fraud is Halloween, because everyone's rushing out of the office, their guard is down, and that's when something is going to be slipped through. So to everyone out there, if you're worried about fraud, get in touch with Jamal before Halloween.
That's right.
Yeah. Halloween, and then the week between Christmas and New Year's. Again, a lot of people are going out on vacation, and so those are kind of prime times. And it's really it's like when the guard is down. And so I think that's kind of the benefit that you were talking to is you can employ systems that are working 24/7 in the background, and it takes the burden off and frees that business owner up to say, okay, I've got mechanisms, I've got checks in place and processes that are going to protect me from fraud. I've got I'll share this with you, because this just came to me as you were saying that. So I had a customer one time that had massive check fraud. I mean, literally almost $1 million. Wow.
And he did not have the check fraud filter service. And the institution I was working for at the time, they said, listen, you got a problem here, and we have a problem here. And so this customer, he did not recover all of his money, and the bank was not able to fully reimburse him for that, for the losses that he had. And so it ended up being a mess. And the bank at the time had offered him several times, you need to look at, check fraud filter. You need to look at some fraud protection services. And it really ended up impacting his business quite severely. I mean, he almost had to close. So.
Wow. Yes. Yeah. Yeah. You hate to hear those kind of stories, but yeah. But the best thing to do is educate, the customer base and the clients and let them know that, it's best to be prepared. It's best to have a plan.
Yeah. You would rather those, even if you're paying somebody that's important, you would rather, have those, if you miss a day, you have an off day, you'd rather have those checks declined, and then you come back to them later and say, hey, listen, I apologize. A lot going on here. I can get you taken care of today, rather than go back and try to do that kind of cleanup.
Correct. Right. Yeah. So that's great. Yeah. So that wraps it up for today. So final question. How is it best to get in touch with you?
Yeah, so you can reach me on my, just give me a call. I can be reached at 804-914-3149.
Okay.
That's my corporate cell. I'm on that pretty much all day, every day. Or you can email me at jamal.hassan, it's jamal.hasan at wellsfargo.com.
Great. All right. Well, thank you very much, Jamal. Great reconnecting with an old friend, and thank you for joining us.
Thanks, Jacob. I appreciate it.
Transact Capital presents Banking on Your Business with Jacob Robertson.